Hi, this is Zach May with the US Chartbreakers here at Zach's Traders Cafe for Friday, the 21st of November. And obviously not looking good in the sense that we had a key reversal to the downside yesterday, failing at the 50-day line there at 67.11 and closing below the notional floor of that rising trend channel from back in April rather. Obviously, that is a bit of a movable feast and not necessarily where the floor of the channel is, but at least while we're below 6,600, that where the channel floor has been drawn, we have the risk of a fresh move down towards the August-September support area around 63.60. So certainly not a good look at the moment. Be interesting to see if Russia, Ukraine, and other activities help the situation. But we had an RSI failure, near the 40 level, so that does suggest that we might have a day or two more of downside. Hence the 63.60 zone target for this market. Moving along to the situation at the Nasdaq 100, and here also key reversal to the downside. The next level down, I suppose, towards the old resistance area, 23,800. Well, ideally, we stay above, or manage to stay above, at least on an end-of-day close basis, the 24,000 level. If we do that, we've got some hope of resuming the uptrend within that April rising trend channel. But otherwise, worst case at the moment is a move down to the August-September support area, and that's just under 23,000. RSI at 35, so still not oversold, which does leave a day or two of potential further downside. What will get this market out of jail? Probably back above 24,500. Moving along to the stocks, and the situation starts off, well, the situation at Alpha Technology starts off. Here you can see that we gapped higher yesterday, which is quite an achievement. We're in a broadening triangle base from February, top of the triangle there at the $40 mark, and we're looking for that as soon as the end of next month. Interesting that situation going against the market. We also had an RSI 50 rebound as well, so quite confident that we could turn higher. If you are cautious, though, you would wait for either an end-of-day close back above the 50-day line around $21.50 or the 200-day moving average just under $25. But at least while we hold the gap there just under the $19.30 area, then we are expecting the shares to push higher. Speaking of pushing higher, the next situation, CCH, is doing that at the moment. Good day yesterday. It's always interesting when you've got hardly any charting history where to try and project where this is going. Looks as though we're in a rising trend channel there from the beginning of last month. Top of the channel there, it's at $14. That could be a target for the end of next month, or the end of the year, while we're above $6. So let's see if CCH can step up to the plate. Moving on to Epsium, which has been was a frequent flyer before. Now, obviously, things are looking rather more negative, but we have broken out of that triangle, and we did that around the $1.40 area. Latest support around the $2 level, so above $2. Best case here would be a move maybe up to $5 plus in coming days. One of the best movers of the recent past has been Magnitude, and here easily exceeded our first target there around $3.20. And looking for our second target there, now up to $5.70, and hoping for that, hopefully, in the next couple of weeks or less. But could be much less than that, given the way that the share price is rising at the moment. Mobile Health is next, and here a broadening triangle base. We've gapped up, so it's a bear trap gap reversal, and at least while we're above yesterday's support area around $2.30, looking for this situation to get up as high as $5 by the end of the year. Obviously, the sticking point here at the moment is the 50-day line, just above current closing level. So through the $3.10 area, looking for the shares to get up to the $5 zone on Mobile Health. Next down the list is Nutex, and here rising trend channel, top of the channel there at $170 rather. I can spit that out. Recent resistance around 135, so above 135, looking for the 170 area as a best case scenario target over the next 2 to 4 weeks. The situation at PACS Group is next, and here we've gapped remarkably higher. We also exceeded our previous target there around $18.60. Best case here up towards $36, but obviously we have come up a long way in a short time. So maybe there's a bit of cooling off to be done before anything new is delivered. On to Planet Green, and here rising trend channel, the top of the channel there, I suppose a little bit higher than I've drawn, so up towards $4.25. We're looking for that certainly while we're above the recent resistance around $2.85. I suppose the Wednesday resistance at $2.60 would be the ultimate stop loss if you have if you're able to give the shares a wider money management position. On to Tyra, and here rising trend channel has been a steady progression since April. Top of the channel there, heading towards $27.40. We're looking for that while we remain above the initial 2025 resistance, $17. I suppose half of yesterday's range towards $18.50 would be a stop loss if you are so minded. Finishing off with Workhorse, and here it's an interesting picture in terms of being a broadening triangle base. As is often the case, we need to break that 50-day line there. In this case, that's at $1. Above that, looking for $1.40 by the end of next month. Ideally, we stay above recent broken resistance through 85 cents. That's it for me today. More updates tomorrow.